Assalamualaikum and a very good day to all viewers out there. Welcome to my channel. Today we are going to learn how to prepare a consolidated statement of financial position on the date the shares were acquired. And this will just be a simple basic consolidation illustration and involving only acquisition of ordinary shares or the equity shares. These are the coverage of our example where you can learn what I have listed here. Okay, and just to let you know, we are going to learn how to calculate the fair value of net asset on the date of acquisition, how to calculate non-controlling interest on the date of acquisition using the proportionate share of the net asset method. Fair value method is not within our discussion. Computation of goodwill on consolidation. We are not going to use the full goodwill method. Our calculation will be based on partial goodwill method since that is not in the course syllabus. And then you're going to learn how to prepare the simple consolidation journal entries on the date the shares were acquired. So this is a statement of financial position of Ketupat and Lemang as at 1st of April year 5. Okay, 1st of April year 5 is actually the date of acquisition. So the date of acquisition means the date that you will notice there will be a control by acquirer in an acquiree. So these are the statement of these two companies, separate statement, right? And Ketupat and Lemang. And Ketupat acquired 376,000 or 470,000 ordinary shares of Lemang on 1st April. So the date of acquisition is mentioned here. So this is the date of acquisition, the one that I have put red. So that is the date of acquisition. I put there as D.O.A. D.O.A, date of acquisition, 1st of April. These are the information that you have relating to consideration transferred for the acquisition. They have agreed that to be. One is by way of immediate cash payment. Immediate cash payment, so it involves cash. Then second one is financial instrument involving shares exchange, and the share exchange is by way of 294,000 shares that were issued by the acquirer. So this is the acquirer. The acquirer is Ketupat. So the acquirer will be the one that will have to do the consolidation, because acquirer has the responsibility to do so if they acquire control in another company. So that this one is the fair value of the shares that were issued. Okay, so most of the information I've highlighted. So we're going to learn how to calculate the consideration transferred to Lemang, which is the subsidiary. So Lemang is your subsidiary. So Ketupat is your parent. So therefore Lemang is your subsidiary. So you can just put here subsidiary so that you won't make mistake, right? And here you put parent, or just put here P and here is S, right? P and S. So it shows that one is a parent, another is a subsidiary. Okay, you're going to calculate consideration transferred that were discharged by Ketupat to Lemang. Also, we're going to learn how to show the journal entries in the books of acquirer to record the acquisition of shares in the investee. And then immediately after the journal entries, after the acquisition, Ketupat will prepare the statement of financial position showing how Ketupat as a parent will present the investment in the subsidiary. In subsidiary here is Lemang, right? So Lemang, we're going to show that again, Lemang. right? In accordance with MFRS 127, no consolidation took place yet. This is just a separate financial statement of the investor or the acquirer. And then statement of financial position of Lemang, which is a subsidiary, where you will notice that nothing changed because the transaction is everything that relates to the acquirer. D, to calculate the proportion of shareholding by parent and by non-controlling interest. Right, we're gonna do that. The proportion of the shareholding. Okay. Next, you're going to calculate the goodwill on consolidation and if there is any bargain purchase. But today, no bargain purchase. We're just going to calculate the goodwill because there seems to be some amount that was issued which perhaps higher than the fair value of net asset. Relevant consolidation journal entries. This is also our focus to prepare journal. And lastly is the consolidated statement of financial position, the result that combine the result of the subsidiary and the parent, the statement that combines. Okay, let's look at what we have here. The first thing is to calculate the consideration transferred. The consideration transfer is actually given in this information here. This is the information on consideration transferred. Okay, so we will make use of that and include in our table here. I prepared a table for you. Yeah, this is requirement A, right? So the first item that you will include is the cash itself. So the cash you will have to include here, 800,000 from the information given. The second one is the shares. Yeah, you issue 294,000 shares times 5 ringgit. 5 ringgit is your fair value. So 1470. And with that, you got your detail for the total, which is going to be 2270. That was the consideration transferred. Now we're going to do the journal entries in the books of acquirer. Books of acquirer. Acquirer here is Ketupat. So in the books of Ketupat, we're going to record this acquisition that we made, that we have transferred some consideration. Okay, the investment is an asset, so therefore this is why you go and debit the investment. The amount that you transfer is the amount that you credit to your bank account and the one that you credit to your ordinary share capital in your books of Ketupat. So that will be 800,000 and 1470. Because you transfer that, you have the control, and now you have that as your investment in Lemang, 2270. And the purpose of this journal, the narration that I put here, is that to record the acquisition of shares in subsidiary, and the subsidiary here is Lemang. If you have two or more, you can record separately. And this is what happened on the date of acquisition. Again, date of acquisition is on 1st of April. I'm putting this here, and that was year 5. Next, you are asked to prepare, if you look at the requirement again, to prepare 2 statements of financial position, but I'm joining them together side by side. C1, statement of financial position of Ketupat. C2, statement of financial position of Lemang. For C2, statement of financial position of Lemang, it will be exactly the same as what you have seen before. Meaning to say that for C2, Lemang, which is, this is the answer for number 2, right? So I put there 2. it will be the same. Why it is the same? Since there were no transaction that happened in Lemang, that because whatever happened in Lemang should be recorded by Lemang. We are now looking at what you have in the books of Ketupat. So therefore the asset here would be the same, yeah, which is going to have the asset here. I just open it for you. It's the same, right? All the ordinary shares is still the same, 940, nothing changed. Just compare this section with this section here. You will see that it is exactly the same, nothing changed. Now we look at Lemang. Lemang, we have done Lemang. Now we are going to do the requirement number 1, which is to prepare the statement of financial position of Ketupat immediately after the acquisition of the subsidiary. So here you can see Ketupat. Before this, it was 2002. Yeah, 2.2 million, sorry, and before. But after it becomes 3670. Why? Because of these changes due to the issuance of share that were made earlier due to the changes. Second one is the retained profit, nothing changed. It is exactly the same. The third one is non-current liability, nothing changed, the same. And then you can have your first total. The total has gone up by 1470. Why? Because of the shares that has been issued. The third one is the non-current asset section. You can see that the non-current asset, you have new item, which is investment in Lemang. This investment, I'll put a different color for this. Investment in Lemang. Okay, investment in Lemang, not bank account, sorry. The investment in Lemang, increase in investment. So the increase in investment is going to be reflected here, because at the end you have to go and capitalize the investment. This is nothing to do with consolidation. This is just before the consolidation took place. Okay, next we go and look at a few items. Current asset. So this reduction of 800,000 is due to the cash payment made minus the cash payment that you transfer as your consideration transferred. Same goes here. This was also due to the consideration transferred, right? Okay, done. You got 538. Now is the statement of financial position, separate financial statement of financial position of Ketupat. And this is not a consolidated statement of financial position yet. So let me have some notes for you here. If you can see, when the investor Ketupat acquires the shares, which is, how much was it? This is not the right answer. 376. Yeah, there was some mistake here. 376. So I just correct that here. 376. Okay. Out of the 470,000 equity shares, right? You can calculate how much is the percentage. Lemang. Okay, the Lemang is the investee. It acquires interest in the fair value of the asset and liabilities of the subsidiary. So the price that you paid, the total of 2270, the consideration transfer is not only for the shares but also for the net asset. Remember, net asset is asset minus liability. If you can still recall accounting equation, asset equal what? Asset, equity equal asset minus liability, right? So therefore, if you talk about net asset, that is also equivalent to equity. So when we talk about equity, that is about share capital and reserve. So when you pay for that, you also paying for, you have the right also to acquire the net asset of the subsidiary after the date of acquisition. And the investment that you have here, the cost of investment in subsidiary, later when you consolidate the result, that will be effectively cancelled with the ordinary shares in the subsidiary, right? And that will be one of the way where you will see the difference will lead to goodwill or bargain purchase. So this one is explained in the textbook. Yeah, it was explained at page 334. You can refer page 334. Okay, next we go and do the next one, which is the last the requirement to calculate the proportion. So to calculate that, you need, I'm doing the first one for the parent. For the parent, the number of shares that were acquired is 376. What you acquired, and the number of shares in parent is 470. Then you multiply by 100%, you will get 80%. So that 80% shows that you have a control, because that is more than 50%. So this is the simple indicator of control. As long as it is more than 50%, at the moment it is safe to assume that there is a control. And because that was not 100% being acquired, Lemang is a partially owned subsidiary. So let's look at the second one, which is the shareholding by the NCI. The shareholding by the NCI, it is going to be the remaining shares that were not acquired. So if the total share was 470,000, and if the parent has acquired 376,000, meaning that the difference between 470 and 376, which is 94,000, is acquired by the non-controlling interest. So the percentage is 20%. Or you just know here it is 80, of course this would be 20. So that was a percentage there. And that is a percentage held by the non-controlling interest. Non-controlling interest. Okay, then you get the percentage as required. The next one is that you are going to calculate the goodwill. This is the next step. After you have done this calculation of a shareholding, you will calculate goodwill. So to calculate goodwill, first is that, as I have explained in my previous video, first is to find out what is the consideration transferred. So our consideration transfer is here, given in the statement. This one, consideration transferred. Okay, consideration transferred I took from the statement of financial position that was prepared after the acquisition of shares. The next one is to calculate the non-controlling interest, because we need to find A minus B. Remember, A is the total of 2270 minus plus 226. Just would like to recap on that. If you have forgotten, this is actually A that I mentioned in my previous video. A is the total of consideration transferred plus non-controlling interest. B is the fair value of net asset. Goodwill will arise if the A more than B, If it's vice versa, it will be bargain purchase. In our case, it is going to be a goodwill. So 207 to 26, how do you get that? What you need to do is, before you can get this figure, you need to first calculate what is the fair value of the net asset. The fair value of the net asset is actually the share capital and the reserve existing in the subsidiary company on the date the shares were acquired. So the share capital 940 is this share capital 940, and this 190,000 is the retained profit. The profit that is stated here is the pre-acquisition profit. Pre-acquisition profit is the profit existing or the reserve existing in the subsidiary company on the date the shares were acquired. So that is pre-acquisition profit, or if you have other reserve like maybe general reserve or maybe asset revaluation reserve, that should also be listed here, right? But however, fair value of net asset will only have ordinary share capital plus reserve. There are no other share capital to be included in the fair value of net asset because we are talking about acquisition of ordinary shares. So the total would be 1130, right? So that is the fair value of the net asset. If you compare this, now you can calculate what is the non-controlling interest. Non-controlling interest here, how do you calculate? Based on the percentage of the net asset. So if the net asset is 1130 and the percentage was 20%, so what you will do is that will be 20% times the net asset 1130. So therefore that will give you the figure 226. With that you will get your goodwill, and your goodwill on consolidation would be the amount that I have highlighted there, 1366. By totaling up these two, and this is the one that you get 1366,000. So that was the goodwill on consolidation. At the moment, we are not going to include impairment tests yet. We will do that in our other videos. The next step is to do the consolidation journal entries for E as per the requirement here. Show the relevant journal entry. So we are doing F now. I'm putting it side by side. So what you will do is you are going to eliminate or cancel off the cost of investment against the share capital and reserve existing in the subsidiary company. So the cost of investment is this. This is the equity or the share capital and reserve existing on the subsidiary company. At the same time, we are also going to record the goodwill and record the non-controlling interest in this consolidation adjustment entry on the date of acquisition. So let's look at what is to be debited. What is to be debited? You are going to debit the share capital. Why now? It becomes one already. The subsidiary and parent now becomes one group. So the share capital of the subsidiary will have to be eliminated. What will leave is just the share capital of the parent. Same goes for the retained profit. Retained profit are also being eliminated. 190. Debit goodwill. Goodwill is an asset, so you will debit goodwill. What is the one to be credited? What you credit is the non-controlling interest. Non-controlling interest is actually an equity, Later, you will have to present the non-controlling interests in the equity section, of your statement of financial position. And the investment in Lemang is being cancelled here. Okay, that is the only entry that you need to do, because this is preparation on the date of acquisition. So let's prepare the statement of financial position. I've prepared this. So we are going to combine. So when you combine, for the non-current asset, you just add up the one of the parent with the one of the subsidiary. Goodwill is being capitalized. Current asset, you just add up parent and subsidiary. Bank account, you also add up. There are no intra-group transaction yet, so it's just a matter of you adding up what you have in parent and what you have in subsidiary. Remember, this is done by Ketupat, the acquirer. And then we have the next one, the ordinary shares. What you will see here is the ordinary shares here will just be the ordinary shares that is of parent, where only shares of parent, if you look here, 3670, right? 3670. So we have the working is up here. It has already, there are no change to the share capital. In the future, maybe there will be change if there is a bonus issue done by parent company. And reserve that you see here is just the reserve of the parent, because the reserve that exists in the subsidiary company on the date the share were acquired is not being included here, since those are the the reserve that belongs to the subsidiary, and that has been there before the date the shares were acquired. So it's just the one of the parent. In the future, you are going to see that there will be some share of parent in the post-acquisition reserve of the subsidiary. Okay, non-controlling interest at the moment, that is what you calculated here. And last one is the non-current liabilities, just add up. Okay, I've done the preparation of the statement of financial position for the group or the consolidated statement. With that, I thank you for watching. This is the preparation of the consolidated statement of financial position on the date the shares were acquired. Thank you for watching. I'll see you when I will see you.